Okay, we have a related question. Brendan asked, based on your opinion, how do you determine or what is a good asset allocation strategy between cash, equity, bonds, etc. if you are investing for the long term for retirement, 10 to 20 years timeline?
If you think the market is near the highest, you really want to have close to 50% cash, and just to be careful. Even at the highest point, I would agree that some shares are not at a very high point. So if you know how to analyze, you think you want to keep this share for longer term, you can still have them. But you don't want to have a situation you're fully invested, because in our market, when the market comes down, the good and the bad will go down. And I think if you are experienced fund manager, you realize that good or bad all go down. So if you don't have cash, you're going to have a lot of problem. Your share will all collapse, and then you underperform. You're going to have more problem because your client is going to come and redeem. That's why you see, when the market go down and then you think it's so undervalued, why is the share continue to go down? Because if you are a fund and you get caught at the max and it temporarily come down and an investor get panicked, they come and redeem. When they redeem, you're forced to sell shares, and you're forced to sell share in a very short time. Then you sell the share, it go down, So that's why, our market is a bit volatile in that sense. So you need to be careful. Then on the other hand, if you have cash, the good and the bad all go down, Last year in March, April, and May, actually, if you have cash, you really want to watch, anything that go down sharply and go and touch the new low, and it meet our investment criteria. This is very important. Meet our investment. See, our investment criteria, we have been practicing it for a long, long time. We wanted to buy a share that is relatively low gearing. Why? Because when you're highly geared, when a crisis comes, the banks or your other investor, the first thing they do, they sell the share that has a high gearing first, because they are threatened to close down. So we always, without going there, we never like to invest in company that is highly geared. So low gearing, potentially the industry or the company, they can grow. They can make money for you, they can grow, they are low gearing. And the management must be experienced. They have been around for a long time. They have weathered many crises before. And the share was down. So under that circumstances, you want to buy them, because you take a longer term view, especially if they, let's say if you think the share is undervalued at $2, now suddenly it become $1, isn't it? You have a big advantage. So we always do that.
I think where he's coming from, right, is that he's looking for, is there a fixed asset allocation percentage between cash, equity, bonds? Because, again, financial literature always say that, maybe you have 50% in stock, 50% in bonds, and then you just rebalance. If let's say the market go down, you just sell some bonds and buy some stocks. But my understanding from your explanation is that one has to be a lot more dynamic in the asset allocation percentage. It's not a fixed number, right?
Yeah, I don't fix it. I don't fix it because I also have to take a look at my portfolio. I can only share with you my experience, okay? There's so many ways of making money. There's so many ways of strategizing yourself, Yeah. Okay. This Black Monday, actually, is one of the highest cash I have had. I have 65% cash before the market crash. And when the market crashed, I went back and buy. Actually, for the year 1987, our return is between 27 to 35%. The top 3 funds are all ours. Now, 2007 December, my ASEAN fund, I raised 52%. And actually, I went back a bit early. So ASEAN fund, outperform the index but lose quite a bit of money also for the year 2008. Even though I had so much cash, because when I come back to buy, I buy a bit too early. But then 2009, I did very well. ASEAN Fund did 106.89%. That is super high. Yeah. So that is the advantage of buying many shares at a very low price. And then when it recover quite sharply. The economy is still continue to grow. And then when the people sell their share, you think it's undervalued, the guy go more undervalued. Just to share with you, like I say, Black Monday I raised 65%, and 2007 I raised 52%. That is all the growth fund. So 2002 I basically, a lot of them we only raised between 10 to 25%, not that high. Yeah. So that means if I raise higher, I could have done even much better in the year 2020. So that's the ranges now.
Okay.
So you
So I
need to try
guess
to.
so I guess to answer Brandon's question is more like, because Dr. Tan knows or has experience to tell when is the market publish and then to raise more cash, right? If let's say someone who is really don't have this ability to do so, then maybe going with a fixed asset allocation may just work, right? Rather than trying to figure out. That's how I read it.
Yeah. So at the moment, you see US is very high. Now, Dow Jones at the moment, the market PE is higher than the highest one in February 2020. Now, your Nasdaq is even much higher than the 2020. So you already know the market is not low. If you strongly believe that US is going to affect us, then you shouldn't be 100% invested. You jolly well raise some cash because you don't know what will happen when things go against you, the share will just drop. So if you are fully invested, I will advise you to raise some cash. No two way about it. In fact, just to share with you, I was given a talk in KL. I think it's January the 12th on this value investing summit. And they asked me a question, what is your cash position? I told them that I'm raising cash. And I think you should raise cash if you fully invest. And then February the 12th, 1 month later, the market time, So of course we have raised some cash, and then we raise some more cash, Then we go down. Then we actually buy quite a bit of share in March, April, and May, even June, as recently as June. Yeah. Because sometimes when you go down, they give you some time to collect, because people still continue to sell that share. So what we do is that low gearing, I think the guy management is good and they can grow. And the share has come down a lot. So we buy them.